Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at why buying cheap is not wise. We'll also take a look at Talisman Mining, CSR Mining Services Companies and Telstra. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering other questions for you. Now, hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time, because this is a show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Now, recent data released by Comsec suggests that both Afterpay and A2 Milk were in the top 5 most traded stocks 2 weeks ago, with each making up around about 1.5% of the trading volume on Comsec. Now, this indicates that retail traders are trying to grab a bargain by gaining exposure to these stocks whilst they are supposedly cheap. But are they really just catching a falling knife? Now, Afterpay has fallen nearly 50% since February and over 21% this calendar year, whilst the A2 Milk Company has fallen over 50% this calendar year and over 70% since mid-2020. Yet the volume of shares traded on the ASX in both Afterpay and A2 Milk has risen in the last few weeks, halting the fall of both stocks, at least temporarily. Now, once solid stocks like these fall heavily, investors tend to do two things. The first is that they attempt to buy a perceived cheap stock at its lowest price, which is exceedingly hard to do. And secondly, some investors and indeed some traders practice dollar cost averaging, which is an even worse strategy. In the last few weeks, I've had emails from several investors who have taken it upon themselves to practice both of these flawed strategies on other stocks, which has resulted in them losing money and asking what they should do now. In my opinion, retail investors speculating that a stock has stopped falling by simply looking at the current share price and comparing it to where it once was is a flawed high-risk strategy. When it comes to Afterpay and A2 Milk, neither of these stocks have confirmed that they've stopped falling in price, and as such, the probability on both of these stocks is that they are likely to continue to fall than to rise. That is, until they don't anymore, and this is why we need to wait for confirmation. If Afterpay falls below $81, then it is likely it will fall to between $40 and $60. And if A2 Milk falls below $5, it's highly likely it will fall to around $2. Now, given this, if retail investors continue to speculate, it is highly likely that they will get caught out, which will be a very costly lesson. So what were the best and worst performing sectors last week? Well, the best performer last week was communication services, up 3.63%, followed by consumer discretionary up 3.19% and information technology up 3.01%. Now, the worst performing sectors included utilities, and that was down 0.97%, with consumer staples up 0.69%, and materials, that was up 1.38% last week. The best performers in the ASX S&P Top 100 stocks include ALS up 11.31%, followed by carsales.com, that was up 10.38%, and REA Group was up 7.64%, with Seek Limited not that far behind, up 7.44%. The worst performing stocks included Fisher & Paykel, and that was down 12.04%, followed by Worley, that was down 4.59%, and Reece, that was down 3.07%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
Well, the market didn't do what I expected to do last week. Instead, it shot up to make a new all-time high, whereas I was expecting we should be going down into a new low. But as I said, the market always does what it wants to do. All we can do is determine when we're going to buy and when we're going to sell. Everything else, the market will determine itself. And sometimes our best laid plans and analysis really don't turn out the way we want it to. And that's why when you're trading the market, you really shouldn't have a fixed view or a fixed view on any one stock. It's got to go to X price, and then I'll get out, or if it falls to X price, then I'll get into it. And that's really why we need to trade on confirmation, not speculation. But let's go and have a look at the charts and see what's going on. Now on your screen is my normal sort of weekly chart on the All Ordinaries Index, and you can see here last week that the market was just beautifully strong, opening near its low there, which opened at 7265. It rose up 185 point range for the week, which is a fantastic move in our marketplace for that week. And you can see the low of 7245 with a high of 7431, which is pretty close to where it closed. It closed at 7425, there. But you can see a beautiful big strong bar making a new all-time high, closing at its highest level ever. But it's a really strong bar, and you can see we've had one strong bar there. You're looking at 196 point range. So we haven't been doing too many strong bars. There's a 350 point range there, but strong upward bars. They're not that common at the moment. Now obviously I'm back to November now last year, so we're not seeing too many big weekly bars, and the market has tipped over a little bit. So reason why I keep saying we are needing to have a pullback, because we really haven't had it. That's the only real pullback we've had, a 6.57% pullback since that March 2020 low. Now market will generally have two pullbacks a year, somewhere around between 6 and 8%, and one of those will be more like 8 to 12%. We haven't had that, and we've only had the one here. We haven't had our second one, which is generally our bigger one. Haven't had that yet, and we're overdue for it, because we would have been due for that by March. And now here we are 3 months later, and we still haven't had our any sort of major pullback through here. So what's going on now? It's basically like walking up a seesaw here. Eventually when you get to the apex, it's going to fall over and come down. Now what we're seeing at the moment is still we're getting that sort of speculation on the market, people getting into the market, people are borrowing money to get into the market, and it's still rising up. Now interestingly, if we look at volume, here's the volume for last week there, and if I put my little crosshair tool on here, you'll actually see the type of volume we're talking about. So you can see here, if I look at the prior weeks, right through to April, we have to go right back to March before we see another week with a higher volume, and March had a couple of weeks like that with the same, where the bars are touching that horizontal line. Then you've got to go all the way back to December, right through to there, sort of between March 2020 and through to December 2020. You can see for most of those weeks the market was hitting those sorts of volumes, whereas this year volumes have been a lot lower since January, and this means a lot of people have already got into the marketplace. So we're seeing this spike volume at the moment. So where it's coming from, I don't know, and it's probably not necessarily, you don't need to worry about that. All you need to say is, well, where's it going to go? Now I know back through here I thought, well, if the market does move up, or it is moving up, my prediction was it would get to roughly 7,600 points, which we're not too far away from that. So maybe at the high this week, or last week, we had 7,431. So we're only 170, roughly 169 points away from hitting that target that I thought. Maybe it will do the 7,600 points before coming down. But right now we are in that period where we're near that point of that seesaw, which could happen at any time, where it will tip over. Markets just do not go up forever, and this is why people are saying to me, hey Dale, you got it wrong. You know, the market didn't go up, it's not going up, but not going down, sorry. It didn't go down, you're getting it wrong. Well, it's not about necessarily getting it right or wrong, it's about having a strategy, and that's what I've said. It's about trading on confirmation. So it doesn't matter to me whether the market goes up or down. You asking me, you constantly ask me where the market's going to go, where the stock market's going to go, or where a stock is going to go. And so you're always saying, is it going up, is it going down, Dale? But to me, it's irrelevant whether it's going up or down. It's just, what is my plan? So if I'm looking at buying, am I buying just before something goes to the peak? And we see so often, every single week, we're getting people asking questions about a stock they've bought in, and they're buying in just before the peak, and it goes up a little bit more, then it falls away, and then they go, Dale, what's happening? Where's this stock going now? You know, is it going to go further to go, or is it going to go up? Or, you know, did I buy at the right time? Because a lot of people will watch chat forums, or get into these chat forums, or they'll watch YouTube videos and look at people on the stock, and they're buying stocks that have already run. And what we need to be doing is doing the opposite. So it's, what is our strategy? right now my buying strategy is I'm just being more cautious with buying. If I'm looking at a stock, I'm not buying one that's already run hard. I'm looking at other stocks that have been falling hard and are starting to turn, possibly like an A2 Milk and the Afterpay that I talked a little bit about earlier on in this report. I'm not buying those yet, but if they start to find some support and let me say that they do prove themselves that they've stopped falling, then I'm more than happy to get into those stocks because they've had very heavy falls and they are good stocks. But right now they still haven't stopped falling or haven't proven or confirmed that they've stopped falling, even though they've had a couple of weeks up. 2 weeks up is not necessarily any confirmation that stopped falling, but right now the market is rising a little bit. It may rise a little bit further, but I've got to expect that sometime in the future that the stock market will peak and will start to fall away. And I don't want to be buying just before the peak and then it goes up a little bit more and I'm making money and all of a sudden it starts to fall away and I've got an exit. That's really what I'm talking about here. But let's now go into your questions and we can answer those for you. Alrighty, our first question that we have today is from Daryl, and Daryl says, "Hi Dale, thank you for your insight and advice, very helpful for a beginner like myself. What is your view on exploration, gold and copper mining?" Now TLM in particular, I have bought it at 22 cents. They look to have found some major gold and copper deposits and have some new experienced leadership. Could I get your view on these stocks as long-term hold or quick buck? Interesting question there, Daryl. Long-term hold or quick buck, you're talking about completely different types of strategies. And you can't just say this stock's a quick buck or it's a long-term hold. It's what is your strategy? You need to get that set in your head first. So what are you looking at? Why did you buy that stock at 22 cents? So you should be asking those questions before you ask me. So why did you buy it at 22 cents? Are you looking for a quick buck? Or you're looking for a long-term hold? And if you're looking for a quick buck, there's a strategy around whether you buy that and how long you hold it for and what your exit strategy is. If you're looking for a long-term hold, whole different ball game again. And you're asking me to get into talk about two separate areas that just aren't related to each other. And again, it's about your intention with your portfolio, and that's really why I say to people is always know why you're buying and why you're selling and why you're into that stock. So I'd be asking you, really, if I was sitting here face to face with you, I'd be saying to you, Daryl, hey, why did you buy it? What research did you do? Yes, you've given us some research. It's gold and silver exploration, and it's got some great management. What else did you do to determine where that? And what that will then tell you whether it's a long-term hold or whether it's a quick buck type of trade, not necessarily asking me to look at the chart on that one. But let's go and have a look at the chart. And for the life of me, I can't actually figure out why you bought it at 22 cents. And that's not being rude to you, I just can't understand, because you've obviously bought it either this week or last week, the week before, because it traded down, or the week before that. In the last 3 weeks, you've bought that stock and it hasn't moved on. And what you've done is pretty much what a lot of people do. And my suggestion is probably you've been looking at YouTube videos or you've been watching people telling you to buy Talisman Mining, and the good money, the smart money was in down here, not up in here. And I'm not saying you're dumb, I'm just saying the smart money got in early, not later, because of the news. What a lot of people think is when they start hearing on chat forums or they start hearing it on the news that, hey, this stock's done X, Y, and Z, everybody else has already known that. Everybody in the know has already known about that. So people on those mines already knew about it, and they would have been telling all their friends to buy in and get in. All the management would have known what they were doing, so they would have bought in. All the big end of town, they already know that because they keep an ear to these sorts of companies. So they have research analysts that know what's going on and what the exploration is doing. So they would have all been making their decisions. And when the news comes out in the media, wherever it is or whoever's talking about it, it's generally old news, and whatever's happened's already happened. And that's pretty much what you've got into, I think, is you've got into that fear of missing out and going, well, hey, it's moved huge, so now I better buy in because it's got good prospects. But I think you bought way too late from your strategy. But let's go and have a look at the chart again. I want to show you a couple of other things. Looking at something like this, here's a huge big bar. Okay, it's moved 40 cents on a 10-cent stock. So you're talking about it opened at 10 cents. It had a high of 14 cents. Sorry, it rose 4 cents, not 40 cents. It opened at 10 cents, had a high of 14 cents. So that's a 40% rise in 1 week on the price of that stock. So it's a huge week in terms of percentages. You can see the volume says 5,198,498. So $5,198,498 at 10 cents ish. So if you multiplied that figure, 5,198,498 shares times 10 cents, you're going to get about not even $1 million, roughly $1 million in a whole week, in the big week. Normally, if you go down and look at some of the other bars, you're going to see a hell of a lot less. There's 902,000 shares. This is a very illiquid stock. How many people are buying in? There's 1.6 million shares at 10 cents. It's about $160,000, $170,000 worth for a whole week. So what you've bought into is a very low cap stock. If I go down to a daily chart, you'll see here. So here's roughly around 21 cents. So 446,000 shares were traded at 22 cents. So divide 446 by about 1/5. 1/5 of that is how many dollars were traded in Talisman Mining in that week, or in that day, sorry. So you're talking about not a lot of participation there. All the big money, all the smarter money, as I said a little bit earlier, got in. They would have got in all around in here, and what they do is let everybody else play with that stock afterwards. So then they put out all the news to tell everybody else to buy that stock, and that's probably what's happened here with you. As I said, I don't know what your story is, because Walsh, you give me some of the story of around some research around the stock. Right now, you could make money. There's no doubt you could actually make money. It could keep going up, but you could also have it go down. Right now, that's not relevant about whether it goes up. All you need to do is make sure you set a stop loss on it. You bought it at 22 cents. Yeah, I would set a stop loss at 15% below that price. If it falls below that, just exit. That's all you need to do. Protect your downside. Forget about whatever the upside does. If it keeps going up, just keep trailing up a stop loss. That's all I would do, but right now, I don't think your buy strategy was correct. And again, I'm not trying to be rude to you, it's just, I'm just being honest with you. I don't think your analysis was solid. I think from where you've bought, I think you've just been suffering FOMO. So again, it's pretty common, especially nowadays. We're seeing a lot of rampant speculation on stocks and a lot of people jumping in on the bandwagon, so to speak. But thank you very much for sending us the question anyway and being brave enough to be able to do that. Next, we have a question from King Kasuma, who, g'day Dale. Thanks for another great episode, and really got a lot out of the Woodside discussion and a lack of the sense that dollar cost averaging makes. My question is the best way to enter trades when you're slowly adding to your available capital on, say, a monthly basis. Really good question. Is it okay to add into an existing holding if it hasn't yet given an exit signal, or is it a better idea to hold on to a cash buffer until a new entry signal presents itself? If you get a chance, would love to hear your thoughts on CSR. Many thanks as always, Kay. Good question, matey. Really good question. So adding to positions, I talk about this in my book about how you build up your capital in your book. So obviously it depends on how much you've got in your position sizing. So if you don't have a lot of capital, and I'm not sure whether that's the case with you, but let's say if you have a desire to do 8 to 12 stocks in your portfolio, which is what I talk about in my book, and let's say you've only got $5,000, you might put $1,000 into 5 stocks, because anything less than $1,000, the growth that you need to get and dividend you need to get to offset costs, you've got to expect somewhere between 1% and 2% of cost to buy and sell with your brokerage, etc. So therefore, you want to make sure you're putting in $1,000, not $500 or $200. So that's my first thing, is make sure you be getting $1,000 parcels at least into that. So, and in the first part, while you're building your portfolio, it's not necessarily, it's about following a strategy, not necessarily having they're perfect where you're going to end up. And what I mean by that is, if you've got, in my book, I talk about not risking more than 2% of your capital in any one trade. So that's a whole nother level. Again, I'm talking about risk. But if I've got 5 stocks of $1,000, that's not enough. So if I save up another $1,000 and I get into a sixth stock, another $1,000 into a 7th stock, another $1,000 and an 8th stock, out to my 8 to 12 stocks. If you wanted to have less risk, you go to 12 stocks. If you're quite happy and you're a bit more confident in managing your portfolio and you have a lot more research and rules around your portfolio, 8 stocks is fine. But the point is, $1,000 every month until you get to the right amount of stocks. The next part of your question is, can I add to that now? Then in that point of view, then you want to sort of build up. If you've got a stock that hasn't given you an exit signal, I don't necessarily, the trader in me says, no, don't do that. Because you generally only add to a stock when it shows you strength, not because it hasn't hit a stop loss, because you might get to the point where it's moved up, and then you add in another 1,000 and then it just goes up a tiny little bit and falls over. But if for every cent it starts falling over and starts losing that last position, you're taking 1 cent off another trade that you've got, another area there. So you're in almost in a zero-sum game there. So always trying to add on strength as a trader, but as an investor building your portfolio, I don't have a big issue with that as long as you're putting in enough money. Once you've got all your positions, start adding to those, and then eventually over a period of a year or 2 years, your portfolio will start to balance out, if that makes sense, and start to get into a more solid routine. And then as your knowledge grows, then you'll actually be able to do your position sizing better and keep it around the pretty evenly. There's different ways to do your position sizing. One is a percentage base, like 10% of all your capital. Another one is, and that means you'll be compounding your returns as you're selling some. You're compounding your returns by putting 10% of your capital into the next trade as you've got a position. But I find people do their portfolio extends between 8 and 12 stocks, and then they go, I've got some more money. Then they go to stock 13, 14, 15, 16, 17, 18, 19, 20, and they get bigger. And with that, because they don't want to sell, but it's running a good actively managed portfolio is about buying and selling and keeping between that 8 and 12 stocks that you should have, and you'll get a much better return. Hopefully that answers your question. Again, if you've read my book, it'll really give you some ideas around how to pull all that together. But if you've got another question around all that, or if I haven't quite answered exactly what you want, please let me know. And then I can handle it a little bit more again and we get some more detail out of it. But thank you very much for asking the question. Now we have a question from Night Owl who says, thanks for your show. I'd be interested to get your and Janine's opinion about mining services stocks at the moment, especially a stock like NRW Holdings, but also Monadelphous are in a free fall at the moment, not really giving an intermediate buy signal. So would be interested to get your opinion about it, preferably for NRW. Now, we will look at that stock for you, matey. Normally, these stocks should follow BHP, etc. for a while. And you are correct. They really should follow BHP for a while, or BHP, Rio, Fortescue, because they provide services. So normally you'd see the mining stock or BHP start to move, and then later on you'll start seeing the services companies, because obviously the mines get started again and obviously they need support. So you do get that happening, and so that's very, very good that you are picking up those sorts of things. Now, Worley Parsons has had some great runs, Monadelphous has had some great runs, but let's go and have a look at the stock that you've asked me to have a look at, which is NRW Holdings, which is stock ticker code NWH, and you can see there, as you rightly mentioned, it's falling away. So it's been falling away since February this year. It's fallen very, very heavily, but really its all-time high is really back there here in January 2020. So it did try to get up there through to February, and it's just fallen heavily from then. If I use my little tool, you can just see how far it's fallen down to that. It's over 50% through to there. Right now, it's not looking good. I think right now, you're best just to stay out of this at the moment. When stocks, like I was saying earlier in my report with stocks, if they are in a free fall, wait for them to start finding some support. So at the moment, this has 1 week up. If you look at this, if you on that last bar on the screen, and even then it's not a positive bar on it, so it's not looking that good. Same with Monadelphous. I'd be saying to you, wait for it to stop falling and start moving up. And this is where people are trying to buy cheap, and why I've talked about it in the first part of this recording is just because it's hit a level and starts going up for 1 or 2 weeks doesn't mean that's a signal to buy. That does not mean it's in an uptrend. It doesn't mean anything other than it's possibly could be in a counter trend, and a counter trend is a move up in the opposite, or in a move in the opposite direction to the prevailing trend. You've rightly said they're in free fall at the moment, where if you just extended that in saying, I can guarantee you would have said to me they're in a free fall in a down trend. Therefore, any move up, you need to assume it's a counter trend until it proves that it's not. And that's really where the technical analysis comes into it. So 1 week up, 2 weeks up, even 3 and 4 weeks up does not necessarily mean it's a new trend. And this is where so many people get it wrong. They'll buy in that 1, 2, 3, 4 weeks up thinking it's gone up 10%, 20%, 30%, 40%, whatever that is, depending on the stock. And they go, I'll get in now because it's cheap, only for it to fall away, turn and just fall away through everything. This stock looks like it's got further to fall to me, just by my couple of minute look on this. I think it's got a little bit further to fall. I haven't looked at Monadelphous in a little while, but I don't have time to look at that today. But really, just stay out of it, and that's why we need rules around. We need rules around confirming when it stopped falling and how we're going to buy into it, and that's why the rules we teach people really are about not just getting in at the lowest price, they're getting in at a safe price, knowing the stock's going to move up. But thank you very much for asking your question. Mining services company, I do like it. I do like stocks like Monadelphous, Worley, and I do like this one, but just too early. Just way, way too early. There's better stocks to trade. Next, we have a question from Nick, who says, "Hey Dale and the Wealth Within team, interested in your thoughts on Telstra. PE ratio seems reasonable compared to the rest of the market, and share price is up for the past 12 weeks, although it had some down weeks in that. That's fair enough. Is it an indication of better times in the future for the stock?" Cheers, Nick. The answer is yes, maybe, but don't expect Telstra to break land speed records. So let's go and have a look at the chart for Telstra. Here. So looking at Telstra here, you can see it's just been moving up since that low back there in October. It's quite a nice move. It did get hit with the the coronavirus threw down into this low there in March 2020. Tried to get up, fell even lower down into October 2020. But I think this is a really nice, strong sign. And Telstra is probably better to look at on a monthly chart, more so than a weekly or daily basis. Great stock to put into something like your super fund, something like something big long-term type of thing. And you can see here, it's now breaking through sort of some of those resistance levels. If it got through that level through there, which you're looking at about $4 mark, it's the sky. It's got blue sky. That's really what it's got there, and I don't think it's going to be too much of an issue. It's not going to give people any. Also, it's not going to give you any stress, if that makes sense. So you're looking at the angle of that. You can see how the angle of this stock, it just keeps moving on that same angle. So it's pretty consistent, where we're seeing other stocks that are going sort of vertical. You see them, it's not sustainable, whereas this one is quite sustainable, the move it's running on. So I would expect it to run along that move. If we go and have a look at our thing here, since October last year, it's gone up 30% since October, so about 5 months. So it's a pretty good move in that particular period of time. Going back to the weekly chart, as you said, it has had some downward moves here, but I don't discount what you're saying. I think it looks pretty good, but again, really, it's not. Telstra's not doing enough fundamentally for me to get super excited about it. That's why I keep saying, I've said, it's going to be a little bit more of a slow move. It's going to be just a nice plodding stock, and I think it's going to be bullish for many, many years to come. And that's really where I think, as I said, it's suited for more of a blue chip, longer term style portfolio, not a trading stock. But very much thank you for the question. Okay, so thanks everyone for sending in your questions. I really do hope you learned some and gained some really valuable insights that have assisted you. Now, we can't answer everyone's questions, as we get way too many to do every week, but we do give preference to those of you who support us, and so therefore our preference is for subscribers, as they are the ones that are supporting us on this channel. So if you did not have your question answered, then that gives you a bit of a hint. Then hit the subscribe button and then ask again. If you are watching this video and think you'd like to have or know the answer to a question, then you actually know what to do then. So hit the subscribe button, stick your question below, and we'll get to it next week in the next week's show, because I generally handle all questions from subscribers. Now remember that here on this channel we do these Monday reports each and every single week and put them out every Monday. We also do a Tuesday live stream, so Janine and I do the live Australian stock market show every Tuesday 7 to 8 p.m. And also, you need to hit the subscribe button so we can, and click the bell on the right of it, so you know when we do upload those videos on Monday, and we do have our live show on. So please click the subscribe button now, and you'll always be able to catch up with the show. But hopefully you've enjoyed today's recording. I'm Dale Gillham, Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.